asking more than 8,000 companies globally, and the purpose was to identify whether these companies do invest into technology innovation, and if yes, what's the outcome? What they did, they ranked all the participants, and they took the top 10%, which they called the leaders, and the bottom 25%, the laggards. And the statistics shows that before pandemic, and this is important, the leaders had a revenue growth 2 times of the laggards. Now what Accenture did, they repeated the study after the pandemic as well, and I will show you what the result was. But there were a couple of questions what really stood out. So the leaders, most of them, trust their data. I know it sounds simple, but in essence it's not that simple. So trusting your data, obviously doing all the background processes and tasks to have proper quality, clean data is not easy, but they do trust their data. Also, they do decouple their architecture. We have been discussing, especially in the morning sessions, about innovation, and is that about technology or how the new technologies are disrupting and how they can be connected to legacy systems. It's about that. Adapt platform as a service. So the leaders, in almost every single case, have started to use platforms. And the last one, they have been using AI around decision outcomes. I told you they have repeated the study. They realized that during the pandemic, the need for digital obviously grew, and therefore the leaders had a revenue growth 5 times of the laggards. So the gap just widening. Wow, the colors are very bad. Anyway, that's a visualization of the FICO platform, and we are talking about capabilities. And the logic is not that difficult. On the left-hand side, you see data. There are all the capabilities and tools to connect any data source you might have in or outside of your bank, including social network, real-time data, whatever. The second column is about creating insights, profiling customers, applying models, AI, to define predictive and prescriptive analytics. At the bottom you see optimization, which is telling you what to do in order to achieve a certain objective. And that technology is out there and has been used already in this region for 10 years now. Next is actions, so all the capabilities to execute decisioning strategies. And the last one is about the outcomes, the ability to simulate platform behavior, all the governance pieces and everything else. Now, this looks like this for a specific use case, which is real-time customer management. How would you like if you as a business user would be able to configure yourself such a solution without an IT project? Because this is not an IT project. It's configuration, no coding. Or another use case, onboarding thin file customers. That was mentioned just before. How do you process customers from which you know very little? All the technologies and tactics are out there. Now, this is one example from an existing FICO customer who has started to use the FICO platform. These are actual results observed in the initial 12 months. And this is a customer which is only using the platform for decisioning, not necessarily for all the other use cases. So the good news is that there is a technology out there which is not IT heavy, IT light very much. It's a bunch of microservices and its configuration, and the business users can really do what they need. I've seen real cases where adding a data field to a customer-facing front end up until risk decisioning takes only 10 minutes. I know currently it takes typically 6 months at least and hundreds of thousands of euros. So, again, the colors are very bad. I would welcome everybody to join our annual conference. It's going to be in May 23 in Hollywood, Florida. And that's the largest gathering of banking professionals in the world. And plus, I would like to raise your attention that we have a nice prize draw at our booth out there, and we would welcome everybody to take part in that. Any questions?
Yeah, please, questions. The first questions arrive. I have one.
Yeah.
Since you are mentioning platforms, there are quite a lot of discussions about the platforms. Also in my organization, they are discussing, what is the platform in your definition?
You can look at it from different aspects. Technically, all these capabilities are sitting in a cloud environment on AWS. Anybody can connect, obviously, with all the benefits of a cloud setup. And I know that at least some of you there will be bells ringing that, oh, security and so on. So we are certified for everything you can imagine. Yeah, ISO, PCI DSS, all the standards. We have all the stamps from all the authorities. So for us, platform is the ability to access those capabilities. It's not the traditional way of thinking that I'm installing something on a computer. And of course, no one is starting to use the whole platform. Everybody is starting to use one single use case and then expand to other use cases. Does that answer your question?
Yeah, excuse me. One of the answers. I mean, we have debated a lot about that. There is, when you talk to techies, they have their definition of the platform.
Yes.
Business has their definition of the platform, and those who are running the marketing and actually the business models, they also have their definition of what platform business model is.
Here, the advantage is that there's no silo data handling, right? These days, if I'm in marketing, I'm working with the marketing data. If I'm in risk, I'm working with the data sitting in the risk function. Here, you can integrate and achieve a true 360-degree view of a customer, because everything is transparent.
Sounds good. Please, audience, any questions? Quite powerful platform. We have a chance to visit this. One of our sponsors. Anyway, if there are no questions, there's one reason, please.
I was just too small. By your experience, and how you cope with interpretation of certain supervisory authorities across maybe Europe or this region, relating to whether this model are quite off the shelf and validated for use in the banks for scoring either physical but also a corporate SMEs part.
You mean whether the authorities accept the scoring technology?
Yes.
They do. They do. We haven't heard any cases where this was challenged by the regulator. Bear in mind, there is a term what I think FICO introduced is explainable AI. So whenever even an AI is making a decision in the software, the reasons why that decision was made is completely transparently available, right? And that is exactly what the regulators expect. So it's not a black box. Yes?
What is the methodology for developing a scorecard model for some country? Do you use data of that country, or do you use some macroeconomic data and then adjust it to specific market?
Unfortunately, I'm not an expert in this, so I can get you the answer. But I think primarily we are using, we're not a data provider, yeah? So we're using the bank's own data. I know, however, talking to my scoring colleagues, that I keep asking the EMEA head of the scoring business why we don't have scores in the other European countries. And the answer is consistently not because the FICO score would be underperforming the currently available scores. They're 100% sure it would be overperforming. But there are scores available. All the bureaus already provide that. So that's a market for which FICO currently does not want to enter even from the outside. We are rather tend to provide scoring individually for banking groups. Just imagine, take a banking group with, let's say, 10 countries. We develop one interface which can be used by any member of the banking group, and we provide scoring as a service from the cloud. That's the direction we are heading. And of course, there's analytical proof that that score gives a significant uplift.
Good. Then let's move to our panel discussion. Tamas, you are leading the discussion, so please take a seat.
Yes. Shall I keep it?
Keep here your, yeah, please keep your microphone. There are a few microphones on the desk. So the panel discussion about lending and geopolitics. How to adapt to the current geopolitical situation and what to expect in the future. Quite tough title. Tamas will be leading the panel discussion. Besides him, there will be, let me introduce Marko Rodic, head of lending at MBA, more than 15 years in banking, in the lending activities, from the risk, started as a corporate risk underwriter, promoted to head of small business risk, operate agro businesses as and corporate and leading 10 years of the private individuals. The last 3 years fully responsible for all lending of agricultural Serbia. Next is our Elma Agic-Šabata. She has PhD degree from Faculty of Economics, University of Sarajevo, MBA degree from European School of Business, University of Göttingen, Germany. Risk Control Division Director and Risk Board Member for the last 20 years. She has been in various leading positions in Finance Division. In parallel, she performed duties as Program Director of Sarajevo Business Forum. Then we have Vikitas Grincherius. Please pronounce it for me. Thank you. I apologize. Risk Management, Chief Risk Officer, Board Member from Swedbank Vitovia. Risk Management Professional Executive with more than 15 years of experience in the banking sector with proven record in different risk management areas. For the last 4 years, been working as a Chief Risk Officer at Swedbank Vitovia, the largest bank in Lithuania, and we have Goran Varant, slowly, Goran Varant, CFO of Podravska Banka DD, worked in the National Bank as a treasury dealer and on-site supervisor, Podravska Banka Executive Director in Financial Market Division, Hypotekárna Banka Montenegro, member of the Board of Directors, and now Podravska Banka DD Croatia, CEO and CFO, member of the Management Board. Ladies and gentlemen, the floor is yours. And of course, if there are any questions from the audience, please shoot. Thank you.
So I'm repeating the question. We do face lots of geopolitical and economic changes and challenges. How is that affecting your lending portfolio and the activities you're doing in the lending space?
First of all, good afternoon, everybody. So I maybe start from quite general introduction. So uncertainty is in there, and it's new normal. So there are different aspects of it, and not only banks are reviewing their credit policies or origination standards, but as well and our clients are much more conservative comparing to times before geopolitical risk outbreak. What are main changes? I would say that you need to be very agile and you need to react very fast. So first of all, if previously you can afford yourself to have credit strategy, no. The same credit strategy for 5 years, maybe for 10 years. Now you must review it each year, maybe even few times per year, depending on circumstances. Another very important thing which I should mention, that credit strategy or collection strategies is not the only dimensions about which we should talk here, because there are also some other very important dimensions such as internal reporting, data extraction capabilities and data quality, as well as ability to very fastly change your internal processes to adapt to changing circumstances. And if to go back to your question, I would say that first of all, what we see in our country, that we see that corporates, especially corporates which are working in sectors with higher energy consumption, as well as corporates which are dependent on raw material prices significantly, they are heated by skyrocketed prices, what means increase in working capital, and what on the same level means big pressure on profitability. So it means that you need to attract new funds, you need to attract capital, and you need to do something with profitability. So very shortly, this is main shifts.
Thank you.
Maybe I can add something. So when we talk about the pressure which is currently present, I would like to start by speaking about the companies, because the companies are the leader of the economy, and the problems which they face are just further transferred to private individuals. So at this moment, we have a situation that the companies are pressured with the costs. It's a visible increase of the costs provoked by the inflation, provoked by the rising interest rates, provoked by the energy issues, provoked by the increase of the price of the strategic inputs. All these elements pressure the P&L of the companies and the pressuring the margins, and they cannot rebound to keep the margins in the level as they expected to be in previous period. This is one type of the problems which are they facing, and this is problem which covers dominant part of the companies, nevertheless what is their size or what is their industry. The second pressure which the companies are facing with is its current geopolitical situations, because suddenly the market is shrinked. They stayed without very important buyers and suppliers which came generally from Russia, from Ukraine, and this way their operational business suddenly is jeopardized. So on one way we have a pressure on the costs, shrinking the margins. On the other way we have pressure on operational business. So this is the issue which companies are dealing with, and the bank are adapting our lending policy toward this issue. So generally cash flows and the projections are adapted to the expected margin decrease on one side, and the other side we are facing the situation that we must go deeply in the analysis of the business profile of the individual client in order to understand entire chain of the production. It's not enough to know the client's buyer's portfolio and supplier's portfolio, but now we need to go deeper. We need to know who are the buyers of the client buyers, who are the suppliers of client suppliers, in order to understand the entire chain, because one weak link in this chain will provoke the problem, because possibility for substitution is much lower, and with these difficulties which escalates compared with the pressure on the cost side will provoke the problems. And this is how the lending policy is adapted and will be adapted in next year or two.
So I'm not coming from the underwriting division, I'm coming from credit risk control part. And what I can say is that so far in this year, despite the fact that the macroeconomic environment is very turbulent, we have not seen any increase of NPLs on corporate side. On retail side, we have seen some tendency of increase, but not yet. So, but we know that interest rates have just started to grow, and we see that there is a huge pressure on retail clients. So definitely, what we expect in the next period is that household portfolio is going to be mostly affected, especially the most vulnerable groups. Corporate clients, most of corporate clients are able to transfer their inflation pressures on clients, but some of them who will not be able to transfer their inflationary pressures to clients, they will be under threat. Supply chain disruptions, there were delays, there were delays in repayment, but they have still not affected the credit quality of those clients. And what we expect in the next year, and that is general forecast for the whole Central and Eastern Europe and Central and Southeast Europe, is that there will be a more slowdown in corporate segment than in retail segment, because retail segment that is under inflationary pressures, they will have to somehow come up and live under the new conditions, and the demand for loans is going to be higher in retail segment than in corporate segment. And there is a huge, as Marco said, there is a huge pressure on all sides, on corporate relationship manager side and also on risk management side, to identify all potential risks that arise from supply chain disruptions and exposures to Ukraine and Russia. So we recently most of the countries in the Southeast Europe had Sberbank, which just over the night became a default bank. So, and now we are trying to identify and see if there are more such banks. And so besides analyzing thoroughly corporate segment, analysis of financial institutions' exposure to Ukraine and Russia is also a very demanding story for risk management professionals.
Thank you, Goran.
Good afternoon to everybody. What just colleague mentioned so far, definitely we are facing the galloping inflation. We are facing the energy prices issues, also disrupted supply chains, and of course, unfortunately, the madness of war. Beside that, I would like to also mention that in Croatia, we are joining Eurozone in 2023, beginning of 2023. We are introducing the euro as a local currency. We are leaving the Croatian kuna. So that we are seeing on the market side of government bond, we are seeing some tightening of the spreads for Croatia. In the past, let's say, track record was for Croatia was that it's a little bit higher than the Romanian, which is probably the most settled country in terms of government bonds. So now far we are facing 10-year government bond of 4.3. When you compare to peer like Romanian or Hungarian bonds in euro, which is 7.5% and 6.5%. Even in local currency, you have almost 10.5% in Romania or Hungary, 9.5% for 10-year government bond, which is, according to my opinion, it's unsustainable in some short-term, medium-term period. Also, when we are looking at that event from the beginning of the year as a very good news for us, due to, of course, first of all, tightened spreads, but as a small, let's say, export-oriented country, it's really challenging to stay without let's say the shells of euro. If you have an opportunity to join, it's like a little boat sailing with a little boat on the ocean at this time. So you are facing all the geopolitical issues and inputs that could be arrived. And also, I think in that moment, joining EU for us would be for a step forward. According to some adapting of some, let's say, of strategies in a short term, since we are a small, medium-sized bank in Croatia, 9 according to asset size, we are very agile in adopting the new strategy, even on a weekly basis, since we have a very shallow organization structure, and also we are communicating on a daily basis with all the, let's say, key departments like treasury, corporate development, risk, etc. What we have done so far in terms of mitigating the crisis, definitely we tighten up risk criteria for in approval process for corporate, mid, SME, and of course in retail. Also, credit worthiness is tightened up for us. Risk profile of the bank we increased definitely, and also we are working on collateral side as well to boost the collateral side with especially in housing loans and mortgage loans with the real estate. For the first maybe part, I think it's enough.
Any questions from the audience? There's a question here.
Hello, good day to you all. I have a question. I guess that you probably already realized some cuts in the risk area. My question is, how did you approach it? Was it like some general limit adjustment, or was it like worst risk grades cuts? And how can FICO help, for example, with this when you see the fastly growing funding costs and so on? How should you like adjust to this? Thanks.
Maybe I can say about something about funding cost, especially for my country, from Croatia. Probably the region is a little bit, each country has your own policy. In Croatia, we are seeing now a very stable funding sector, especially in the banking side. We have centralized banking system, so the funding side is very low and it's very stable due to we are mostly concentrated on the Avista, so on-site deposit and also time deposit. So it's let's say a very conservative funding strategy, and it's quite stable. On the asset side, we are seeing interest rate growth that could be effect of spillover could be transferred to the clients on a corporate and the retail side. So from the profitability and from the, let's say, efficiency side, we are seeing the wider interest net margin. So for the banking system at the moment, let's say this kind of raise of interest rate in Croatia is quite positive. Of course, we are facing inflation like our clients as well on a cost side. So, but generally at the moment we are seeing very high profitability in banking system.
We have quite similar situation in Lithuania, so we see jump in profitability for banks for all market participants or almost all market participants. Of course, it depends on balance sheet structure and your loan to deposit ratio. So our loan to deposit ratio is around 60%. So also it should be stated that the Lithuanian market is dominated by big Scandinavian banks. So our bank is number one according to assets. So our assets is more than 15 billion euros. And we are famous as really very conservative, traditional and low risk bank. So in general, no changes in origination standards. If to talk about corporates, some changes due to inflation for private customers, but not for corporates. Maybe one additional actions which was implemented that we started to much more closely monitor exceptions from approved origination standards. But overall, I would say that when you are number one in the market, you need to act responsible because you just can't stop lending. Because in such a situation, your action will create crisis. So you need to be very careful here. So I guess I covered the question.
So I'll talk about experience on the banking sector in general in Bosnia, not about my specific bank. The banks have not changed actually anything in their credit approval policies in the segment of retail clients. Although it was actually it was obvious already in April and May that the interest rates would grow. The banks have not done any changes, but what was done, actually, the banks have performed credit risk stress tests, and those clients that were at the bottom and that were actually identified as those that could potentially have worse credit worthiness based on interest rate growth, they are now monitored on a more strict and a more frequent basis. And then now just recently, a month ago, our regulator has actually issued a new regulation that the banks, if they increase interest rates by more than 2%, for clients that they would have to increase risk provisions for both stage 1 and stage 2 portfolio. So we have this kind of limit. So the banks will have to decide what to do if they're going to increase the long-term income or build some new risk provisions. So, Bosnia and Herzegovina is not part of the European Union. So but all our regulatory framework is actually has been recognized, and we do have a stample that it is in line with the European Union framework. So I think for the period that is going to come, it is very important what the banks are going to do, how they are going to react. Are they going to enjoy all those huge interest rate incomes, or are they going to limit them somehow? As certainly retail segment is not going to survive. The NPLs are going to be under huge pressure in the period to come.
So the question was what the measures we took regarding this. Well, you know,
so much change, which is surprising.
The situation when the crisis is starting, this is the moment when the risk management taking the leading role in the bank. So that the measures which we took, in fact, was to identify what are the weakest part of the portfolio and what are the most sensitive part of the portfolio. So you even do not take the exact measure toward the clients. You take some measures in order to protect the bank. You identify what are the potentially weak points. If necessary, you need to intervene. We did some modifications for the parts which we think that are more sensitive. Yes, and the most riskiest part on one side. On the other side, what is important regarding the interest, this is now the confrontation between the finance and the risk, because this change in the interest favorize the floating interests, which is not in favor of the risk management, because increase of the interest increases the possibility to increase the installments to the clients, and they will easily enter in the problems of over-indebtedness. Now, we think we need to take into consideration this part regarding the interest as well. So we are discussing at this moment what will be the next steps. We are observing the portfolio. We are analyzing, assessing the clients, still on the case-by-case level. When we are approving the loan, we need to take in consideration what will be effect on each individual clients, and after that, what is the multiplicator effect on the small business, on the private individuals, etc.
I think you asked me how FICO does help with such a solution. I'm giving you one small story. We had a client who was using FICO tools just when the pandemic started. And in their markets, all the other banks faced an 80% decline in lending, from within a period of a couple of months. Now, because these guys had already collected all the data, had all the models, had already optimized their lending decisions, they could use our tools to do optimization and stress testing of the portfolio, and therefore their decline was only 20%. I think that's the answer. Can I have another question? So we have already mentioned regulatory aspects. Is there a tightening on what the banks are doing or what the banks are allowed to do, or are the local regulators looking in more detail on how the lending practices are changing, or what changes do you expect, or what changes are already happening?
maybe I can start. So I would not just keep focus on a regulator. I would like to intervene the state intervention as well. So not just national bank, but the state and the responsible ministries. We had a situation in Serbia 6 months ago. The state imposed a ban on crops export, which affected the cash flow of companies in agribusiness. And after that, there was a specific situation that this year was the year of big drought, which affected the yields of the farmers. So at the end of this, we had a situation that the price of the input is higher for the farmers, and on top of that, they are pressured by the lower yields. And then the state international bank provoked the rule that a moratorium should be allowed to the farmers, which asked for it. And they said that this moratorium should not be treated as a restructuring program, or that the client are identified as a problematic client just because of this restructuring, because this should be something which is, let's say, temporary measure. But this is one of the measures which occur this year, but we can expect in next year that the state will intervene, depending on the industry, depending on the budget situation, depending on the characteristic of each individual country. But state, the ministries, and in the end, the national bank will make the measures which we need to mitigate the situation which we have now.
Thank you.
So I actually already touched upon this question. So additional rule which was brought actually is that if some client if we conclude that some client is going to have a deterioration of creditworthiness, then we are not supposed to put this client into stage 3 category, but that we should perform modifications and of the initial contract, so that this is actually, and so that we could implement payment holidays and all kinds of measures that we had during Corona crisis. So our government in general has not taken any significant measures to counteract inflation, and so now they are doing that through the banking sector. So, and actually, all the details of that new regulation are not clear yet. They will be clear very soon. And we don't, and actually the same rules have also been imposed for the corporate sector. So we will see what the time is going to bring.
Sure. If to talk about our bank, so as our systematically important institution, we are directly supervised by ECB as well as by local supervisory authority. So there were no changes in ECB level legislation, which would be directly affected by geopolitical tension. But from ECB, what we see already, I would say from the start of pandemic, that cybersecurity and credit quality is most important areas for ECB already for 2 or 3 years, and at least it is publicly communicated that the same focus areas will stay for a few more years. If to talk about local regulator, then once again, no specific regulations towards credit origination standards or NPLs or whatever. Increased focus in business continuity, in cybersecurity, and if during COVID so-called anti-cyclical capital buffer was released down to 0, so it's reintroduced once again and will go back to pre-COVID level in next year. Also, additional capital requirements were introduced due to quite active mortgage market in Lithuania. So if you need some additional capital for mortgage loans.
Like colleague said, also in Croatia, we are the biggest bank in Croatia, owned by a large European group, and they are supervised as a group by ECB. So we have seen some technical changes in some creditworthiness, some risk profile, and etc. in collection as well, but generally there is no such, let's say, big change of regulation in Croatia. We are facing big pressure on AML at the moment from ECB. I don't know if you are changing as well, if you are facing as well, big pressure, especially from AML side, and we have some organizational strength in that part. Also monitoring on a daily basis, it's really huge. It's a reporting system for AML is really challenging, and now for our point, it's really priority. Also, what we are facing, probably the ECB country that are supervised by ECB, is new Basel IV, ECG regulative as well. We heard some presentation today as well, and this is, let's frame, general speaking. We have some measures as well from the COVID part, which were taken by state, by government, and Croatian National Bank, and also now we have seen some, let's say, models of financing by the state for citizens, for the cost of citizens.
Thank you. Any other questions from the audience?
Just a tiny question. I think Elma mentioned that retail customers would actually take more consumer loans. Yeah. So wouldn't that be a risky kind of decision, both from banks and customer side?
I agree from that point of view, but if we take a look on inflation rate forecasts for the next year, what we can see is that in all countries, inflation rates are still going to grow very quickly. So in Central and Eastern Europe, it is going to be a double-digit growth even next year, and Central and Eastern Europe is somewhere up under 10%. But it's still very high growth. So retail clients will have to somehow compensate. They will somehow have to solve their cash problems. And if we look at the forecasts, these are the official forecasts from some relevant institutions, we see that they do all see the growth of retail volume portfolio, which is going to be quicker than the corporate segment. From the aspect of my bank, for instance, we have planned to manage corporate lending at the same level as this year, and we do want to go to diversify our portfolio and go more into retail banking segment, despite the fact that it is actually a risky portfolio. But overall, we want to increase the diversification in general.
Right. So have you done any analysis how big the increase in NPL can be in future period, especially for retail portfolio?
Yes, we did, but I cannot disclose numbers. So, but maybe just my general comment. Stress testing is significant part of general risk management practices. So we're doing it. We did it many times even without this geopolitical tension. But here I would like also a bit reflect on questions regarding interest rates and what we said that increasing interest rates is creating pressure for customers. But in general, negative interest rates, which we had for 5 or even more years, they just contradict to natural economic logic. So interest rates cannot be negative. So in general, we are coming back to normal situation. It's open question what level of interest rates is normal and acceptable in longer run. But now we are coming back to this, I would say, traditional banking when people and companies are paying interests for the loans. What is normal? So just, this is even not a problem, but very good ability of the banks that banks manage to adopt their practices to survive in negative interest rate environment. And what we see now, about what we talked with colleague, that we see a huge jump in profitability due to this jump of interest rates. So from bank's perspective, even if we would have much higher NPL ratios, what would lead us to higher credit impairments, yes, we would have profits from which we can afford with higher credit impairments, and on overall situation, it won't affect banks. Even more, I would say most probably, even with higher NPL ratios and credit impairments, we still would have much better situation than before interest rates increase.
So we are actually now having a very similar situation which we had in year 2008, when Euribor increase was more than 3% in just a few months. So, and we know what happened after that. We know that retail segment collapsed and that there was a collapse of real estate prices. We are now hearing more and more that real estate prices are definitely going to be decreasing, so that this is a further risk that the banks are going to see in the next period, which is going to impact their risk-weighted assets and capital. So the whole, but all this actually depends on the total geopolitical climate and what's going to happen with Ukraine and Russia. And we, three of us are coming from ex-Yugoslavia, and we know how long the war lasted. We all thought it would be a month, or it was that it would not be a war at all. At the end, it was more than 4 years. So I think we will have to be very patient and keep the solvency of our institution at the best level. And okay, I will.
If I may, just one very short reflection. For me, geopolitical tension is much wider question than just Russia and Ukraine. And still, at least at current stage, Russian and Ukraine conflict is local conflict. But if we will think about possible China and United States conflict, it would be really global conflict, would be create much more problems for all banking system around the world than just Russia and Ukraine. And at least from our perspective, we already see some negative outcomes via disruption in supply chains, where there are some problems with China suppliers and so on and so on. So I would try to think about in much wider context than just this conflict.
I wouldn't agree about the local, let's say, the character of war, but let's talk about the NPLs. I think regarding the NPLs, what we are facing so far, we are not expecting some deterioration in the retail sector, since the state is financing all the cost of citizens. What we have seen now in our, let's say, analysis is that we are facing the SME sector that could be heightened in terms of NPL due to lack of working capital, due to pure capitalization, skyrocketed input prices, and also volatility on the market. So the main focus of our, let's say, risk profile is on SME. But what we have done so far is the approval process in Croatia is very strong. It's very implemented by Croatian National Bank. So let's further deterioration in ongoing environment. For us it's under control. But if we are facing let's say stagflation or recession in the near term, I think all the risks will be heightened very much.
So regarding the effect, it's hard to say what is the exact number, what the effect will be. It depends on the several factors. First is the structure of the portfolio. This is the one very important element. So it depends on the previous strategy what bank had when imposed the commercial and the risk strategy. This is the one point. And the second point, which is very important, is that what will be the intervention of the state in case if the further deterioration occurs. So there is a rumors already then some government's plans to allow moratorium on the PI side, private individuals, in order to prevent escalation of the problematic loans in this segment. So there is several factors which will finally define what will be the exact number of deterioration and what will be exact size of the crisis which will affect the portfolio of the banks. So at this moment what we can do is just to be prepared on every possible scenario, to be very flexible in our decision-making process, and to think about alternative scenarios for whatever alternatives occurs at the market.
Thank you. Any other questions? Then I would like to thank for all the panelists. I hope the session was interesting. Enjoy your break.
Break until 3:40.
Thank you very much.
Okay. You're welcome.
Thank you. I'll take that. Thank you.
I don't know how to switch it off.
Mama.
Actually, all of them were working
Yeah. solution which is
Ali imate svoju banku u Crnoj Gori?
Crnoj Gori, da vlasnici imaju u Crnoj Gori i u Hrvatskoj. Neki fond u Srbiji, to su vlasnici. nama generali u sektori, generali u Surani iz Italije i imamo te obitelje talijanske bankarske obitelji koje su nakon zajedničkog djelovanja i imaju 90%. Iz generali su neko vezani, svi su neko zajedničko djelovanje. Tako da nekakve bankarske obitelji koji su bili dosta vezani na mojeg klasici sanitarna lokacija, a što tiče i javnih funkcija i nekakve tamo. Imali su banke koji su prodali nešto, imali su uglavnom onda ide teš malo banka. I u generali su supportirali nekako više kao institucionalno više. Uglavnom to, za sada, to je dosta 20 godina smo ovdje, dosta to kasnije ćemo. Smo se navidjeli, nije njih ili nas.
Sjedište u Zagrebu.
U Koprivnici je sjedište, to je malo grad na sjever, ali u Zagrebu sam statički skupina. Ali baš sjedište banke u Vesku i sam. Vi ste sada dobro. Mi ćemo veseli ovoga sve skupa.
Možda ćemo izaći.
I ovo je razmišljeno, rođaci će stati neće. To je Bog sam, da. Ja mislim da se ovo, da sam praca zaustavi, da čak i inflacija bi se stavila pod kontrole, da bi se to doslovno, radno roku bi se sve to korigiralo. I ovo je toliko umjetna stvorena kriza da bi ne radi. 2008 bi imali pravi sad pravi. Ovo sad ja vidim da je čisto politički rizik. Sad.
Znači, koliko će ovo trajati?
Do kuće i tebe, do koliko mogu dati ego se mogu ići, da se tiče.
Možda čuti da ovaj Litan, jer ovo še nije bilo ovako opasno da će on napast možda i Litan, ali nisu još uvijek.
Da, mislim, dobro, može biti na tamo čovjek sa kolega, mislim da vjerojatno prvo se Litan, jer ovoga, kad bi komentirao da je lokalni, da što mi rekao da je lokalni, dobro, tamo lokalno ništa. Mislim da se velike sile tamo bore, ali da, oni pravilu imaju veliku prednost, oni se pregledaju, to je prije svega te ove njihove bivše publike, s ove informacije, su nemoći.
A nikto ne ljudi.
But who do you need? Andrei? Yeah, Andrei is here. But I need... Yes, yes.
Спикер хочет Милан, хочет проверить презентацию. Все ли нормально? Вот это вот только что сказать. Милан новый. Вот этот Милан различный. Вот сюда ее загрузи, и я там на компьютер. Все, дальше разбираемся.
Смотри.
Был спонсор Люк Халливан. Он говорит, что из-за того, что мы делали мастер-презентейшн, мы засрали весь дизайн по презентации. Потому что, ну, я тебе тоже говорил, нам самое главное, чтобы у нас все было нормально в плане дизайна. Если бы это работало нормально, мы бы вообще не делали ничего. А он говорил, что у него там засранный был какой-то бэкграунд. Давай сейчас я сейчас с Милана прогоню эту презентацию и подтвержу, что все у него нормально.
Вот смотри, вот этот косяк. Видишь, вот там вот этот текст.
Что это?
У нас первая презентация, у тебя первая.
Ну вот, видишь.
Тогда получается это.
Ты когда их собираешь, ты главное не копируй дизайн, пускай они будут отдельный дизайн. Это самое главное.
Вот оттуда опять вставился.
Dobrý všechno zatím. Zatím dobrý?
Pohodě.
Zatím to fachá, jo. Tady jsou křičáky. Teraz to vaše, to je od nás. To je od vás?
Asi jo.
Já nevím teď právě.
Pak budeme balit, to pochopíme.
Ano, to my taky říkáme, ale těch věcí je tu tolik, že...
Лендинг. Я съм на лендинга. Лендинг стейдж.
Jo, tady je zašitný. Od projektoru, víš, tady dálkovej. To jste ještě nepouštěli, viď?
Co?
Projektor.
Já teďko ho vypnul.
Jo, takhle.
Chceš kafe nebo něco dnes? Já jsem byl připravený za tím.
Jo. Ty z toho, ty CX stage, ne? Co? Jaký máš stage?
Payment.
Презентацию máš.
Mám už je nastavená.
A tam nebyly žádný problémy? Než to musí být.
Ale nevím, ale vím, že to nešlo přepnout tam, tak jsem musel přepínat manuálně tam ten.
Podívej se teďko na Google.
Já tam vidím nějakou fůlu něco.
No právě tu fůl teďko.
Ale tak já to otevřu a přepnu to na ten stroj.
Stání, a to je fůla. To máš kejde z toho, to musí být.
Chceš povědět?
Did you get my slides?
Yeah.
Next speaker.
Let's check.
This is not mine.
You mean this?
Yeah, in this stage.
Oh,
Yeah,
sorry,
yeah.
sorry. I'm just thinking about other stage. Yeah, your stage is here.
Be sure, because the previous speaker is this. It has some difficulties. Yes, yes, that. Yeah, sorry. This is
So
the next
let's start.
Yes, you can put it on. Check. And that front screen also works, yeah? That front screen also works, yeah?
Front screen.
No, this bigger screen,
Oh.
which is on the floor.
I will turn it on. Yeah.
It was not working.
It's not. Everything good?
Yeah.
Oh, sure.
No new templates. Previously.
Just like Microsoft. Everybody send like from PDF. Like it's 40% said it is PDF.
Peter
And
told not to
send
send
this,
PDF.
and send them yesterday. So we should do a long
Okay.
presentation.
I was wondering also, only I had some specific shifts, but not fonts, but I think it's all looks okay. But that's really good also, yeah. That can.
Yes.
So we will have another question.
We will have a different perspective. I hope not so dark.
So
And
then we look only on the bright side.
yes, one on the bright side. Take our comments.
But there was like risky guys.
Yes.
Простите.
Blbne to ale ještě mi řekni zítra. Vy začínáte zase s panoramou. Tam budeš mít setup. Pak se stěhujete sem. A pak se stěhujete zase zpátky.
A tam jenom jeden, takže to bude jednodušší. Tam tady chodí problém s tím, s tou prezentací, že musím se udělat tu obasu.
Jo. Takže ten notebook normálně vezmeš, jako tady pak sem a pak to vezmeš zpátky, nebo vezmeš. Máš tam pauzu, když to skončí. Jo.
Prosím tě.
Ten má monitor. March today? I don't know. Ten monitor să nu fie. Nu. Atunci scoși mi-a, atunci să reduce, scoși mi-a. Ok. Počkej, prosím.
A ty klikry jsou kde? Já nevidím žádnej. Kam to dali? Jo, to je jeden. A ještě to byl jeden náhradní.
Is to projekci?
Try next slide.
Hi. Hi, hi.
Заглушку обратно срубить, просто на это нажать еще раз. Сюда? А это или на это? Я забыл, что сейчас заглушку срубить обратно на место. Просто выбираешь камеру. Ага.
today. We are about to have the last panel today. For the panel, we will have a keynote presentation by Kaspar Lukashovs. Kaspar is head of retail lending and insurance in Lending Group. He has 20 years of experience in retail lending and online insurance business development in the Baltic market. With his team of 30+ people. He's focused on providing their clients with outstanding experience, service, and product offerings. Kaspar, please join the stage.
Okay, so hello everyone. So happy to be here and today talking about growth. So and I think if we talk about mortgage lending, then we already covered today quite many of the obstacles we face all around. So is it war? Is it geopolitics? Is it ESG? Is it new regulation? And it seems that everything that happens in economics actually touches the mortgage business. So, and you know, in this time, of course, you would expect me to see slides like this when we talk about digitization and improving things. You know, oh, slide like this, guys. Can we have slides on the top, please? So that otherwise I'm speaking to myself. Thank you for a note. Yeah, we've been in this already. Yeah. Okay, while technicians are fixing the things, then basically, yeah. So one is the environment in which we are, and the second is solutions what we are picking there up, and of course we are talking about digitization, automation, and transformation of our banks, and that's a big part on our agenda. And I think that these are kind of big buzzwords. And I have this fantastic visualization for all of this, and I feel very bad now that it's not on the screen. So let's actually wait for the quality here. So it was working just before. I can say hello to my mama, to my to my colleagues back in Baltics. So yes, I think then it will go all bad. We did really test it before we start. All worked. I of course can tell the story. That's all fine, but you know, there's so lovely pictures I found to kind of share with you guys. Unfortunately, techniques is not helping here. But so I will jump straight. So give a short note what is a Luminor Group and to understand the context in which we are playing. So we are actually kind of built out of 6 banks in Baltic states, so Latvia, Lithuania, Estonia, We are a legacy of or combination of DNB, Nordea in all of these three markets. So basically, what we got like 6 years ago, it is 6 managements, 6 different IT core systems. Not talking about all the side systems around that. Different cultures, different premises, everything totally different, and in total servicing 1 million customers and around 2,400 employees, what is now. So we actually started with even larger number at that time. So you can only imagine what is the legacy system, what we are having and facing around us. At that time when we got these banks merged, we actually, okay, so we can, what happened? Yeah, so this was the slide about digitization and those buzzwords, and yay, everybody happy about the digitization, what we want to get. And for banking, it's of course really, really complex. Yeah? It's not an easy thing how to do it. And Luminor is really not an exception, as I explained to you, that we are this combination of six banks. And our goal actually was to increase our market share double time in mortgage business quite recently. But the legacy, what I mentioned to you, is that we were having these 6 banks in all these 3 markets and then pulling it together under one management team for whole markets. So we're not having separate teams in each of the countries. And then of course it is the goal to have everything set in the one picture, to have it combined in all 3 markets. Then when combined, we were second largest player right after Swedbank in Baltic states, so providing a mortgage loan, and our portfolio is around 5 billion. Then what happened in 2018 and 19 after the merger? So actually the bank was focusing on completely different things. Yeah? So we were looking on transformation, daily banking, digitization of the core services, and lending was a little bit put aside. And of course in that kind of environment decline was there. So we actually lost the market share back from 20% in new business down below 10% across all 3 markets. And after some time, in 2020, we finally were in a position that yes, let's get back to the business. Let's go there. I was also hired at this year, so very active in going for growth. And then boom, a new external threat, coronavirus, all the business down just in a couple of months. Nobody knows what to do. Credit risk. I think in the previous panel there was one panelist who told that when shit is happening, then risk department is taking over, and they're kind of making things very clear who owns, and that actually happened a little bit that time. The good thing is that we quickly recovered, not only us, but all markets. Real estate business was back on tracks. So we saw that customer confidence was back, so they saw that they actually can buy. And then we wanted to see how actually we can get back to the business. And as I mentioned, then I'm not going to talk much about digitization. However, this is what we started. So this is the very short, lovely mortgage journey, what many banks may probably have or had, I don't know. But there is a long journey from the moment when customer seeks for the loan or for the housing to the moment when it actually is a reality. But then, okay, so then what actually did we do? As I mentioned that we didn't follow very closely to digitization. That is something that we are not facing our attention most of all. However, we outlined the journey, what is the short-run thing and what is the long-run outlook. And of course, if we talk about the long run, then this is about harmonization across the markets, digitization and automation of the processes for lending area. And lending area, this automation, we talk about end-to-end from the moment when application comes in till the moment when it's paid out, so actually including all the risk engines and etc. So this is the area where we started our journey, we have our deliveries, and we did our job. However, we started to get back, but these things are not giving you instant return to the market from the growth perspective. So that's why we looked on the non-IT enhancements, what we actually can do to grow the business. And we focused on three main areas, where one of the areas is offering, what we actually are providing for our customers, what they can get, so that it is competitive comparing to the market, and even better. And of course, digital marketing is something what we could not do without. So it's about proper solutions in our webpage, proper applications, and all the journey for client should be very much in place. And the third thing is processing enhancements, and processing it actually is an overview of the whole story when actually customer starts to apply, and then what actually we are doing as a bank when we receive the customer request. And that is the area where I will focus today the most, which was actually a very strong contributor for the results we reached. So what did we do? So enhancing this application process, we saw that consists of multiple blocks. So one thing is that at the core there is our advisory. So in Baltic markets there is a specifics that we are not having broker business in between us and the customer. So we have this privilege still to work directly with clients across all the customer journey. And in this situation, when the mortgage is one of those last, let's say, bastions, where the interaction between bank and the client is playing a lot of impact, then of course we need to pay attention how the advisors are working and servicing. Because you know that we people tend to buy from other people, and the mortgage is kind of the deal where it is very important. Then these are the blocks which we really paid attention. Our advisory experience and knowledge, and actually what tools they are having when they are servicing the customers. Tools what helping them to communicate with clients, send reminders, CRM to follow up each request from client, etc. And processing is overlooking how the process is actually happening, and I will go a little bit deeper in this processing part, as this was the core. And then actually the results is something what we are expecting to get out of it. So first of all, we did redesign the whole way of work also at the business. So it's not only about the advisory part, because one thing is that you want to kind of change them, how they perform with clients, but actually you need to change organization. And the first thing we did, we take learnings from IT world, where we know that there is waterfall and agile as the core methods of managing developments. Then we actually took the best from agile way of working, what can be adapted to the business line. And what does it mean? It means that we created a tribe of mortgage people across the organization. So risks, legal, compliance, sales, growth, product, marketing, everything, into the one tribe with common goals, what needs to be delivered. And within that tribe, we of course set up the squad, which was leading the whole change and transformation. And the squad consisted of multiple cells which were taking care of certain areas. And some of the challenging parts, what I now recall back when we started to do that, was actually to introduce, first thing, that all the different functions work together, because it's not an easy task to agree with non-sales related teams like legal, compliance, risks, to actually focus on certain growth targets. And also to make new ways of cadence. Cadence means how often and how we are actually interacting with each other. You know, from Agile there are these stand-ups and things like that, what IT are using, so we actually adopted that as well, having multiple layers of these stand-ups which were following different problematic things and solving items. So what we did reach, we actually reached and pushed to the moment that we can actually take significant decisions in 24 hours. So if somebody in the team comes in and say, hey, you know, I have a problem, I cannot solve it, I need to go to, you know, this committee, that committee, no. So basically there is an authority within a tribe, and if there is not enough, because sometimes at least we are in a bank, so a bit regulated, so we have a room to escalate it to the management board level, who has to respond in 24 hours with a decision. And that's really important to make the change really, really rapid. So trying to say is that the team could take their own decisions in a pace and range quite significantly without formal committees and management board involvement, etc. And that was helping us to give things quickly out. Some of the interesting tools was that we also went away from the so-called branch perspective. We also looked at there needs to be bonding between our advisors as well, not only within some sort of formal team, but the team across different teams who comes together and shares their examples of customer servicing, escalates issues what they have, and also have direct correspondence with, for example, credit risk officers who are immediately able to solve some of the individual customer cases. So those were some of the changes that I can mention today. So the second one, and this is where COVID actually helped us. It is about how we established the proper remote origination of the deals. So today, and actually back from when COVID started, all the banks actually in Baltics had a big push and succeeded pretty well because the environment was good to have fully remote customer servicing available. So the only place where customer had to be physically is to meet notary and have signatures. So that's the only mandatory element across the Baltics which was needed. Of course, some exceptions were as well, but in general, that allowed us to basically avoid any physical meetings. Yes, so basically remote origination, but before that, important also to mention is that one thing is that you have this remote origination, but also the first thing is to collect all the data from customer in a proper and safe way, to put it directly into the systems and actually to then work with that data so that it is not only just identified but actually authorized to be used. So we had those tools in place, so that allowed us actually to run this process smoothly. And the third big block we were working is of course what is the tracking? How do we track the new business and how do we actually impact it? And this is about data-based enhancements. So we identified multiple problems in all the layers of customer journey, starting from kind of searching for us in different external, internal channels to the moment when actually there is an origination. What are those different pain points what actually customer faces and what our employee faces to do the things in a time and quality. And then collecting all that and making it also kind of, I would say, quantified to see the impact. If we solve this or that, would it actually change the output? And output, what we measure very much is closing rate, and closing rate from applications we received in general, and then on each individual advisor level, what is there. And then based on that methodology, we basically took in sequence those activities which are paying the most impact on the closing rate to be fixed and solved in these new ways of work what I was actually explaining before. So that's around those three core elements. So it's basically this agile way of work as one block. Then the second thing is end-to-end remote origination, what is important. And the third thing is these enhancements which are data-driven. So these are the three blocks. Of course, they would not be successful in case if our offering would be poor, our pricing would be bad. We know that the mortgage area is kind of the one where this commodity effect is actually present, and these are very important. One other area where, of course, we paid a lot of attention is exactly the quality of the servicing customers, the time of response in different stages to client guidance through. One of the problems we actually faced, and only now, later on, I understood that that was not really a problem. That was actually a gain. As the market was booming at these times as well, it was good that we started this change so we actually could digest the demand. But customers really quickly understood that we can provide high-level consultation to clients. And we observed that many customers of other banks use the opportunity to consult with our advisors and then actually sign the deal at their home banks. And at that moment we found it as a problem and tried to actually filter those deals and see where do we put more effort, less effort, etc., etc. Now looking back, I see that was a blessing that actually those customers were coming to us. We had this contact, and the case is that we actually had to find an extra solutions how to keep those clients at that moment when they actually were doing this. So that was learning by doing. And these are some of the numbers. You can see that we started something around here, middle of 2020, our change program and getting back to the market. And this is the growth versus the baseline, which was somewhere back in 19. So we grew in a tremendous way, and our market share basically reached the level what we were expecting. We actually doubled it, and the growth was there. Sounds fantastic, right? And super easy. But is it the end of the story? Unfortunately, we are not alone in the market, and there is a competition, and there are all those external environments. And what we learned a little bit after, that the momentum stopped. The growth actually continued, but in really, really low levels. And of course, at the first we blamed the competition, that they are doing price wars and all that, those kind of things. So, you know, but what did really go wrong? Because price is easy, you can change it anytime. And what we did learn in the situation that when we launched all these new ways of working, we changed the process how our employees are working with customers. What do they send, how do they send, etc., etc. And we still didn't have all this technology behind, which is actually automating many of those steps. So this is big dependency on the performance of our consultancy team. And the case was that the consultancy team actually was not doing this part. So the main problem was the repetition of all those items what we actually provided for our advisors that they are actually using and doing on their daily jobs. So many of those introduced things of how we are making sure that customers are not dropping off actually somehow dismissed to the level when we start to feel it on the results. So therefore, we kind of looked once again on what was our core strategy here. What did we? How does it look like? And this, you can see that it's strange, but there is one bubble missing. So that is processing. That is the one where we were focusing. The whole our journey before. But the problem, what we as a management team, we were missing these two things when we work with people. It's about repetition, which after some certain time only becomes habit. So we didn't spend enough time in helping our teams to really utilize all those tools, solutions, communication standards, and everything. And also, you know, that there's also a turnover of employees. So you constantly get new people in your team whom you need to teach and make sure they're following the standards. So, and this is the area where we failed as a management team to make sure that the new ways of working become habits and that the results are consistent. Because the other parameters, the competition level is something what we were actually controlling. So, and in summary then, the three main takeaways what we got. So right offer, best process, and the third, the main point is servicing habit, what we need to ensure and provide for our customers. Thank you.
Very interesting presentation. Do we have any questions?
Yes?
Concerning remote, can you please increase the dependence on the flow? How do you
So on mortgage process as such, so first of all, the fully remote part as the KYC with account opening and becoming a bank customer is a separate process. It exists, so this is not in control of the lending area. So there is a full KYC and all customer authentication and everything run by certain engines, and that is something we introduced in parallel, not only because of lending. And it allowed us to still, customers could still become customers of the bank remotely. But overall, if you talk about fraud and in mortgage as such, then of course still there are quite many manual connections and checkpoints of customer and the deal that the fraud levels are, I think, almost non-existent. Yeah, and here I would say that COVID helped because we were all in remote. Like regardless in which country you are, we were all working in teams. And then it doesn't actually matter where you physically sit. And that allowed us to form those Baltic teams. So and those Baltic teams then working together in this virtual environment and getting things done. And yes, we made sure that it is actually consistent across all business. And this all kind of the general brain of the program was centralized, and it was a mixture of people from all different markets, but not trying to kind of make equal parts and stuff like that. So we are one team, and we don't really care in which market we are. The issues sometimes are when there are some specific local legislation competencies missing, and then of course we need to have local peer in the room. What I also need to add that when we started to kick this program in and all these regular meetings, let's say 15 or 20, 25 minutes every day and covering different topics, then have prioritization sessions, problem-solving sessions, I was really not sure that that's the right way. And there was huge resistance from people, why it is needed, so what benefit you'll have, let me work, I don't want to stand up there and discuss some things. But now after we use it already for almost 2 years, I cannot imagine that I would work without it or come back to the previous ways of working, because now we are really in focus and control of what we are doing and making sure it's speedy delivery. Right? Thank you very much.
Thank you. So Kaspars, please take your seat because you're also part of the panel. Together with Kaspars, I would like to invite on the stage Marcin Konkiel. Marcin is a mortgage chief product officer in mBank in Poland. He has 20 years of experience, and he is working in mBank for the last 10 years. What is interesting about him is that along with being a mortgage expert, he is also an ultramarathon runner. Hi, Marcin. And I would also like to invite Gergő Molnár. Gergő is Managing Director in Retail Credit Management in K&H Bank in Hungary, part of KBC Group.
and he is also CEO of K&H Mortgage Bank. In these roles, he is responsible for the end-to-end credit cycle in retail lending of the bank. So, very happy to see you guys all on the stage. The topic of our discussion will be mortgage lending in recession. The previous panel covered a lot on this topic, and I would like to discuss more on the positive side, because we all know that the crisis has two meanings. It's opportunity, but it's also threat. So in every crisis there is an opportunity. And now we are in a very strange situation with rising interest rates and rising inflation and one at the same time. In Bulgaria, for example, we have 20% official inflation year over year, only for the last 12 months. At the same time, the rates of the interest rates, the levels of the interest rates are quite low yet. We are at still 2.5%. So my first question to you is, what is the current situation on the mortgage markets in each of your countries? And how is this situation reflecting the real estate market and the customer behavior when choosing their home? So maybe we can start with Georgia.
Yes, thank you, and thank you for having me. In Hungary, we are in a quite interesting situation in terms of mortgage lending, because we have a very wide subsidy and subsidized loan scheme in Hungary. So every second mortgage loan is coming together with a subsidized loan or subsidies offered by the state. So basically you can have a lot of subsidies or subsidized loan if you are having children or if you are planning to have children. So that helped to grow the mortgage business quite a big time in the last several years, and also it helped the families to get their first or home or to have a bigger home. Now what we experience that beside these subsidies, the mortgage prices increase quite a bit. The current funding is more than 10% in Hungary. The base rate is 13%, and we are operating in a negative margin environment, because the current mortgage rates are around 8 to 9%. So the market is
so you have financing and 10% on deposits.
Our funding for mortgage, our funding for mortgage for 10 years fixation, which is the most popular product, is 10.3-ish currently, and the average price is around 8.5. So what we experience that the negative margins are hitting the banks, which is somewhat compensated with the subsidies, because definitely banks are gaining some margins offering these subsidies from the government, but it is not enough. Although the whole market is kind of, I'm not saying collapse, but decreased quite a bit, to approximately 40-50% of the previous quarter's results. So there's a sharp decrease
in terms of new business.
In terms of new business.
And how is this reflecting the real estate market?
Currently, the real estate market is not affected yet. You know, we have also approximately 20% year-on-year inflation. What we experienced that the new flats and new houses price and used flat prices started to go into different directions. New flats prices continue to increase big time still, definitely green solutions are much popular now than ever, given the high energy prices. On the other hand, what we experienced that the increase of prices on the used flats stopped already, and that we expect that for the bigger houses where the energy consumption is maybe not the greatest, we can experience even a little bit deterioration of prices.
Thank you very much. What about Poland, Marcin?
Good afternoon. Well, I would say that the Polish situation is quite similar to the Hungarian one, with some I would say small differences. I mean, the inflation is also at almost 20%. The last result as of the day before yesterday was 17.9%. So we are approaching 20%. The interest rates, the national bank interest rates, gone up from 0.10 up to 6.75 over a year. This implies the variable rate to go above 7%, which means that the mortgage loans are now priced at between 8 to even 11%. This, of course, affects, on one hand, customer eagerness to take a mortgage loan, and it comes also with, of course, decreased creditworthiness of the customers. So what we are observing right now, that the mortgage market is down September 22 versus September 21, is down by 70%. So we are at 30% of what we're selling on the market a year ago. If we are looking at the real estate market, we assume that approximately 50% of the market is coming from the cash transaction, and another half is coming from the mortgage loans. So actually, 1/3 of the demand evaporated over a year. So this, of course, affects the market. On top of that, if you're looking at the cash transactions, the situation just behind the border, being in Ukraine, is making this market more turbulent. And also the increase of the rates results in simply increase of the risk-free rate, and then comparing that to investments in apartments to rent, that also minimizes the margin versus the risk-free rate. So that demand also is decreasing. However, you cannot see it in the prices yet. I mean, the inflation, of course, I would say helps that the prices are not decreasing. The decrease is about 1 to 2% when it comes to the pricing. But what we see is that, for instance, the new dwellings are down by 30% when it comes to the primary market. So we are expecting that less apartments will be built in the coming months or a year.
Thank you. And we have seen pretty similar situations in the both countries. Kaspars, how is the situation in the Baltics? Is it the same, or you have some differences as being in the Eurozone?
Yeah, so from our company here, I'm representing the Eurozone only, yeah? So
yes,
at least we are not having 7% WIBOR, yeah? So that's a benefit. Yeah, but so if you talk about market, then of course there are differences between Latvia, Lithuania, and Estonia, but just to kind of give a common picture, then after 2 years of booming mortgage business and real estate market growth significantly, which was around 30%, then actually the changes started to happen just late this summer. So actually we start noticing that in August, actually the real estate market started to gradually calm down, And it seems that in September, October, it was even a more steep decrease in deals in the real estate markets. We see that it is something between 20 and 30%, depending on the market, of the new deals. And we also need to pay attention that the new deals in the statistics, in the official statistics, appear a little bit with the lag. Yeah, because of if you buy a new dwelling, you need to actually complete it. Yeah, because there is a principle also in Baltics that you tend to sign a contract and even like half a year or even a year before actually the dwelling is available for you. So we will see some further corrections of these data as well. So real estate market is coming down. The proportion between mortgages and cash transactions is something around 70% of the deals are actually mortgage from the real estate deals. Depends on the markets, but something like that. And in mortgages also, we feel therefore really quickly the impact of the market decrease, and we see that it is also the same, 15 to 30% depends on the market, the decrease over the past months is in customer applications. And so they're basically now being much more conservative. And what we hear from the real estate developers and sellers, they're actually saying that customers are taking much more longer time to think through whether they want to buy or not and assess different factors. In terms of margins, then yes, we are in Eurozone, therefore we follow the Euribor, and the Baltic market is specific of that we are, I think, 80, 90, closer to 90% of the portfolio in Baltics is with floating rate. So we are not really a fixed rate market. Therefore, the increase of this Euribor, of course, affects like basically everyone. And currently, as you know, Euribor for 6 months is above 2% already, and as this week the base rate was set to 2%, then we are expecting that Euribor will climb up. Current prognosis is that in upcoming years, if no crazy actions would be delivered to stop this inflation, then we should remain below 4% in the Euribor. And currently, if you look on the bank rate, this is in those all three markets something a little bit above 2%. So still there are really, really attractive conditions for customers, what they can have.
Thank you very much. Now let's talk about a little bit about the pricing strategy about the new business in this situation. And I would like to ask Gergiu, what is your pricing strategy about the new business? And we are talking a lot about inflation. The inflation is having a lot of reflection on the customers' incomes, the customer expenditure. Are you calculating the inflation rate in the risk parameters, in risk politics in your bank?
Yes, thank you. I think that both parts of the questions are very relevant. As I said, now we are operating in a negative margin environment. Basically, what happened, and we are just following a follower strategy that some of our competitors started to price very low, way under the funding cost, and the rest of the market is not bold enough to increase the prices to the level of funding or even higher. So the whole market is somehow trying to push the prices a little bit higher and higher to reach a funding level, and now we are on a thin line we don't want to definitely lose market share or lose market share in a big time, but definitely we want to somehow gain some margin, at least lose as less as possible. So this is our pricing strategy right now. About inflation, I would say that we started to calculate with inflation in our risk parameters very dominantly this year. Definitely, minimum living cost was a very important risk parameter ever in the last several years. But now what we have done was twofold. First of all, we implemented forward-looking inflation as well in our risk parameters. So not just following, let's say the inflation of last year, but we somehow predicted an inflation for this year, and we already implemented in our risk parameters. And also, we implemented an elevated energy prices in our minimum living cost as well. In Hungary, there was very low energy prices in the last several years. So it was donated by the government. Now it was released this summer to some extent. So energy prices increased quite a big time for several segments of the population and in our portfolio. So basically, we started to calculate which segment will be affected, and we added these extra energy prices to the minimum living cost calculation for the new business. And definitely, we stressed our existing portfolio with the same logic as well. So I would say we were quite strict in this, but basically, this is what needs to be done, as I believe.
So you are playing conservative and trying to be careful on this market?
Definitely. I would say from risk point of view, that there are two main enemies in this world for retail risk aspect. One is the inflation and the living cost, and another is unemployment. So we need to fight these two back in the new business. One way is to play with minimum living cost to be a little bit more conservative. Still, what we experience that based on the calculation, in case of mortgages, it doesn't have a huge impact on our new volume. So it has some impact, but it is not very dramatic. In terms of unsecured lending, what we experience that whatever we are doing in minimum, whatever we are restricting in our risk parameters, it has a much bigger impact. So,
thank you. And yes, please.
It is not for a very long time, so it started to shrink in the last approximately 1 year and went down below zero in the last approximately half year. So definitely it's not our intention to maintain this proposition for a long time. On the other hand, as the third biggest bank in Hungary, we cannot say that we are just stopping mortgage offering. We need to serve our own clients, and we need to serve the clients, and also we need to have a good relationship with agents, because we have a very strong agent proposition in Hungary. And also, definitely, there's a quite big engine, so a lot of people working on mortgages. So you cannot shut down from one day to another and to reopen it in the next quarter if the margins are back again.
It doesn't happen so fast, yes.
so it's a very hard decision, but we need to maintain and keep up.
And all other banks are doing it as well.
Yes, exactly.
Yes, quite honestly, not the typical banking business for sure. Yes, and we're up to now speaking about the new clients and what are they are now getting as an offer. And I would now like to point the discussion to the current clients, because the new clients, they have a choice to take a loan or not to take a loan. But there are a lot of clients already with loans. So this situation is getting harder for them. And in this relation, I would like to ask Kaspars, what is your strategy towards your acting clients, especially in the terms of potentially slowing of the economic activity?
Yeah, of course, we're closely observing this this topic, as the portfolio across the markets we are having around 5 billion, so it is a huge number of customers affected. What we see as of today is that the NPL levels are actually the best ever at the moment. So the overall customer ability to pay their debts are at very good levels. There are basically almost non-existent overdues in kind of looking on total numbers. So, and of course we on weekly basis monitor it, and basically we see that it is really, really stable at this moment. Of course it can change over the night. So we are not dreaming of that. So therefore we're looking on certain activities what we would be taking in case if there would be some kind of cases, and we're looking now on the two levels. So one level is really in the restructuring area, where our teams are looking how to take care of those customers who will really face certain problematics, and actually how to help them to restructure to kind of make, let's say, forbearance period for 6 months and so on. So that, and we also and here of course those processes are in place already. But what we are talking about is to ensure the fast track, so it can be done for customers much quicker, lowering some commissions, lowering some effort from customer side, because in this kind of moment when this is a mass problem, then banks shouldn't kind of consider that the commission for any kind of these changes is a big income level. So basically we are working on that part, so to be ready in case if something happens. And also we have experience during the COVID times. I'm not aware how was it in other markets, but in Baltics there was this moratorium period when anybody could freely apply for 3 to 6 months period, basically paying only part of the installment, and then basically many people actually used it, and we see that those who used it actually have recovered pretty well and now continue paying also very good. So basically in Baltic markets none of the bank has no issues with that anymore. And then the second block which we are looking in is let's call it, vitamins, prophylactic activities, how to mitigate potential risks for some of the clients. And this is more tricky part, because this is about how to help client to, how to say, limit the risk of becoming insolvent. And of course, being in very regulated, we cannot find easy ways just to say, okay, you can pay just not pay 6 months or 3 months, you still need to report. We can say, hey, you can extend the term, but then actually the maximum term is there. So there are multiple things that we could actually do for clients, but then we need to figure out which of those could actually be most convenient. So of course I cannot name exact steps, but there are certain things that we are planning to offer for our clients in this area. What we already did introduce, we introduced the fixed rate for customers, so that they can actually fix at certain level, and therefore that will help them to actually forecast. And of course from credit risk perspective that's a really safe bet, because customers' payment are fixed and it's not going to be increasing, and that's part. But overall, one element just to conclude on the Baltic market is to bear in mind that the financial crisis back in 2008, 9, 10 actually hit us almost the most, I think, in Europe at least. And we took a lot of learnings, and banking credit policies become much more thought through and conservative in different ways. So therefore the portfolio today is really qualitative, and we are calculating already significant buffer of around 5% when we are calculating the solvency and the rate for clients. So basically we did already this mitigation from bank side, and that's why the current levels of Euribor are not harming us at all. But of course, if the Euribor goes up to 5-7%, then it becomes already stressful.
And you are fixing the rate for some certain period of time, or for the whole period until
we are playing with it in 3 ways. So for some customers we are offering to just change the Euribor cycle from 6 to 3, for example. But when it comes to the fixed rate, then it is 3 and 5 year margin.
Super. Now let's talk about a little bit the cycle of the interest rates, because it's always a cycle, and there is never only one-sided trend. So there is 2 opinions among the experts. One is that the cycle will continue for several years, and we'll see relatively high rates in the next years. And the second opinion is that if the recession hits and the economy slows down, then the interest rates will sharply go down in order to keep the economy going. So in these aspects, I would like to ask Marcin, what are your expectations about the interest rate cycle? And when the interest rates start to go down, there will be, of course, a risk of refinancing the loans. What is your strategy in this direction?
Well, I think we are in a situation when talking about inflation and the interest rates, it's not only about the financial markets or financial merits, but also about politics. And I mean, theoretically, the interest rates should go up, and in order to slash the inflation. But on the other hand, they are not as effective as they used to be. Especially when the government is pouring, I would say, tons of cash into the system by social expenditures in times of inflation, and 1 year before the elections in Poland, it would be difficult to allow for the increasing costs and not getting the subsidy from the state. So that's one side of it, and therefore I wouldn't expect that either. On one hand, the inflation will go down in the near future, and therefore the interest rates most probably will not be going down very fast. When I looked at the prognosis of mBank chief economist, and he's expecting that by 2024 the rates will remain at the same level, and then they will slowly go down, slowly. So there will be no rapid change of the interest rates. And now, what it means for prepayments and refinancing. From this perspective, the Polish mortgage market is in a good situation. We have introduced the fixed rate loans on a wide scale in mid-2021. Unlike, for example, in Hungary, where I think that if not every, then most probably more than 90% of loans are on a fixed rate. For us, it's something new. Of course, we had customers who were switching from the floating rates to the fixed rates, but still the estimations are that less than 10% of the portfolio is based on a fixed rate. So the risk is limited to this 10%, then the slow decrease of the interest rates is also some kind of the stopper for the refinancing. and what we are fixing interest rates for 5 years only. So then it's also the period that we are fixing for is limited. Now, what we can do about it from the new sales perspective, well, not much. I mean, unlike in other markets, like for instance in Germany, where you have some kind of penalties for the customers or simply fees for fixed rate loans prepayments, we are not allowed to do that due to the regulatory recommendations. We cannot do what the Americans do, so they transfer the risk to the investors in the mortgage-backed securities. So the only thing we can do, we can simply add additional margin to the current interest rates for the prepayment risk. And now, as I said before, the current rates are between 8 to 11%. Adding additional margin for the prepayment risk, on one hand, is a must, but on the other hand, it decreases the creditworthiness, increases the price. So that's the game we are playing now.
Great. Just before the closing remarks, because I saw that we have a little bit more time, there was a panel before noon about the ESG politics and the ESG and how ESG will be implemented in banking as a sector. But there is also a possibility that the banks will be able to influence the ESG politics of all sectors by the financing they provide. There are certain products that are stimulating, for example, buying property in energy efficient building, or for example, buying a solar system and so on. So how are you implementing, and are you implementing the ESG in the products that you offer? Georgia?
I think ESG is very relevant for mortgage business. There are 3 ways which are important for us. One is a risk management part, and we all hear from consultancies that PDs and LGDs of energy efficient real estates and clients will be much better. And I tend to believe that, but we haven't seen proof of that. So we will see that. The second one is that what is the product scale? I strongly believe that offering dedicated green products to our customers with some benefits can help the customers and can help the whole cause why we are doing that. We just implemented our own green mortgage in KNH some months back, and despite the whole market is not booming right now, it's started to be an important product line for us. So I strongly believe that with products and with good products we can help the customers and we can help to make their homes more environment friendly. And the third one, and I think that this is the most interesting part, is the data usage. So as I mentioned earlier, that we started to use, for example, energy data and energy consumption data in the minimum living cost. And when we are digging deeper in this ESG world, we experience that there's a lot of data available. We can buy databases from various sources about energy consumption, and definitely we have energy certificates for mortgages, for the dwellings, whatever. And this can be used. So we can personalize, for example, a minimum living cost for each customers based on their energy consumption, and not just use the statistical average for the mass, but personalize the data a little bit, and that is that is helping our risk management and also might increase acceptance a little bit. So that's also a very interesting part, I think.
If Marcin has something to add to this?
I think, almost everything has been said today. And Georgi just added on top of it. I'll just mention one thing, because we all know how good it is from the customer perspective, from the retail banking perspective, but I think that what was said today is this green bonds regulations. And this can also, then the green mortgages can also help banks to minimize the cost of financing by issuing mortgage-backed green bonds and or any other securities. And this is, another aspect that that can be taken into account.
Super, thank you very much. So one last very quick question to all of you, only with one sentence. What is your expectations about the next year? Are you more positive or more negative about what is going to happen in the next 12 months? Maybe we can start with Kaspars.
In next 12 months, I hope something good will happen, but at least in next 6 months, nothing good will happen. That's what I would say, because in Baltics the inflation is 20% up. The heating is most expensive in Europe, so we are at least we have a gas. I think we are not going to have any problems with heating itself, but the cost will be there. So the government will invest a lot to help families. So the question is what will happen with all the pricing topic in the spring. If it will stabilize, then actually I believe we will very quickly get back to the growth. If not, then who knows. So uncertainty is the tag name for the next year, definitely.
Thank you. Marcin?
Well, yeah, the problem with the war in Ukraine and resulting from that energy prices and the problems with energy imports will definitely still be there. But just to look at the bright side of life, I strongly believe that in times when the market is decreasing, it's a great moment for us to actually focus on developing new products, new features. Usually the same team is responsible for the same IT teams, is responsible for maintaining the product, dealing with the with the applications, and now we can simply focus on the development, on building new features. Kaspar said a lot about it, and this is the time for us to prepare for the better years, or maybe ending of the 2003, when the situation will improve. That's from my side.
Thank you very much. And final words from you, Georgi?
Yeah, I'm both positive and negative. Let me start with the positive. I think the bank's portfolios are much healthier, or at least what we experience in Hungary, much healthier than before the previous crisis. And it was not so long ago that the experience we all gained at that years was maintained. So whatever is happening, that most probably NPA rates will not reach the same levels. Definitely there can be a bigger drop back, but with the current situation, I'm relatively positive that the NPA rates will not increase to that extent. On the other hand, what I think that new mortgage business and new production will not jump back to the level of the last several years rapidly. So the current lower levels of production will be with us for a while.
So if I can summarize, there might be a storm, but there is always sun after the storm. right? Okay, so thank you very much for these great discussions. If you have any questions, we'll be happy to answer. We have covered a lot of topics, so maybe we have answered all your questions. So that's it from us. Thank you very much for watching and for being here. There will be gala dinner at 6 o'clock, right? 6 o'clock. So we have 1 hour to take some rest and see you all at 6. Thank you very much. Where was the lunch? At the same place. Thank you. Thanks.
Thank you.
Very good discussion.
Thank you. Dziękuję. Nie?
Best presentation today.
Okay. Thank you. Okay, good, good. Let's catch up, yeah, because I will not be...
It's what we all expect as consumers, to be understood and treated as individuals. But no matter how great these interactions become, there's always room to improve, to make them more consistent, more seamless, more personalized. For instance, when you deliver a great new marketing offer, it was likely built with different data, using different tools than other operations like risk management, financial crime protection, or even your supply chain. As a result, when customers move throughout the customer lifecycle, from one touch point to another, each interaction is not as valuable or even as enjoyable as it could be. This is a growing problem for companies in every industry, because personalization is king, and companies that offer disjointed experiences are quickly falling behind. That's why we built the FICO platform. It allows you to create amazing customer experiences with outsized business results. The FICO platform is a complete solution that enables you to easily connect your data while applying the latest AI, machine learning, and analytics to uncover insights which you can then put into action across your organization. In most companies, their IT structure looks like this, with each system built on its own island. With FICO, we bring your data, analytics, and application development together on an open, unified AI decisioning platform. This makes building new applications a breeze, because now you don't have to start from scratch. All you have to do is define the functionality you're looking for. And by empowering business stakeholders to collaborate with data scientists and application developers, you can work together to simulate, test, optimize, and deploy highly effective decision strategies. And you can do it fast. With the FICO platform, all your applications will operate from the same 360-degree view of the customer. So the important decision assets, like data characteristics and predictive models that are created by one department, will become available to the others, creating a centralized, responsibly governed system of action that creates better experiences for every one of your customers at scale. It's time to realize the power of a unified platform for digital decisioning. The FICO platform. Get started today.
Banks and credit unions have a problem. Their outdated technology can't keep up. Not with the engaging experiences of big tech and challenger banks, or the speed of new fintech services. And especially not with growing customer expectations. So financial institutions can either lose their customers to better digital players, or they can upgrade. And that's where we come in. The Backbase Engagement Banking Platform is the evolution of the digital banking experience. With the power of one platform, you can start small, then grow big across all channels and business lines. You can increase conversions during onboarding and product applications, deepen customer loyalty and engagement, partner with the finest fintechs, and above all, improve life for customers and also employees. With turnkey apps plus accelerators to build your own, the platform can be tailored to the unique needs of any sized bank or credit union, like the hundreds around the world that we're powering today. This only scratches the surface of what Backbase can do for you. To learn more or speak to us, visit backbase.com.
Ones, zeros. An entire world made up of ones and zeros. A digital world, complicated and dangerous. Anywhere we find ourselves, anywhere we're heading, unlimited possibilities in the palm of our hand. One touch and we can pay everywhere. Absolutely everywhere. Control our money and our accounts without having to go to the bank. Comfortably, 24 hours a day. We can finally work from anywhere, safely, easily, even from there, or from there. Nothing stands in our way. We can prove our identity 100% whenever necessary. The digital world is astonishing. We are here to fully exploit all of its benefits, Monet Plus, and applied cryptography. We change ones and zeros into unique services and zero risks. We are Monet Plus. For a quarter century, we have been helping people use their digital identity and their money comfortably and safely. Anywhere, anytime. Monet Plus. Digitally, anywhere.
It's a real-time world, in the workplace and in our personal lives. We expect speed and simplicity in everything we do. Payments are no exception. At ACI Worldwide, we're providing mission-critical, real-time payment software to corporations around the globe. Whether it's two friends splitting a bill over lunch, a student making sure tuition is paid on time, shoppers paying instantly online, or an insurance company dispersing funds for a claim, our software helps make real-time payments a reality for consumers and businesses globally. Because customers are demanding real-time, and governments are mandating it. Thousands of banks, merchants, and billers rely on ACI to meet the evolving real-time payment needs of their customers, helping them pay with any device, through any channel, in any currency, anywhere in the world, with an experience that's fast, simple, and secure. ACI Worldwide, the leader in real-time payments.